Good day, wonderful patrons. I trust you're all doing great. Wonderful patrons. I've been getting so many requests from the novice traders. How do I get started? How do I become a great trader? I've been trying to understand the candlesticks. I don't even know what is happening. These are quite big predicament for someone who is starting to trade or navigate the global financial market. Today, I'm here to ease all your troubles by at least giving you a stepping stone for you to really understand that the global financial market can be done by anyone. I've seen people who do not know what Forex trading is, though they have already their definition of what Forex market is. Forex trading, you are basically a Forex trader. By the way, if Forex trading doesn't require you to trade, even when basically trading online, even when you're doing trades with your friends outside there, purchasing commodities like tomatoes, buying a headset, buying a TV, buying a house, that is still an exchange that is happening. And there are two participants there. There is the buyer and the seller. The same principles of trading is what has trickled down to even now the technological advancement to which we now have electronic trading, where you can also trade online. You see, so even if you don't want to trade the real the actual market, you've been actually been trading indirectly. When you're buying those commodities, when you are paying for a certain service, that is still part of a trade. For transaction to be complete, both parties must agree on that same price, or the price that they are already set. So what is Forex trading? For the sake of those who don't really know what you're dealing with, Forex market, FX is Forex exchange, foreign exchange. FX or Forex trading is the activity of buying currencies or selling currencies with an anticipation of making money. So if said is an activity of buying or selling as you want to make money in any of these transactions, which is usually done online. So you can choose to buy, you can choose to sell, and you'll make your money. So you see, in the Forex market, you can not only, Forex is like an umbrella term, but there are so many instruments that you can trade. You can not only trade FX, that is the currencies, you can also choose to trade gold. You can choose to trade indexes, you can choose to trade stocks, you can choose to trade bonds, you can choose to trade so many things and so on and so forth. Even big tech companies as part of S&P 500 or NAS 100 or UK 20, IUS 200. There's so many things you can trade. So you just have to find your niche. You need to know what your capital is capable of handling, and then you trade it. So now today, let me just talk about the Forex market. That is the FX trading. You said Forex is the buying and selling of currencies, commodities, cryptocurrencies with an aim of making profit in any of these transactions, and you're doing this thing online. So when you come to the market and you choose to buy, what do you expect the market to do? When I come to the market and say I want to buy, basically I expect the value of that thing that I'm buying to appreciate. That is when you're choosing to buy. When you choose to say you want to sell, you're expecting the value of that thing that you're buying or selling to depreciate. But you are making profit in any of these transactions. So whether you're buying, whether you're selling, you're making a profit. It's not like because I have to buy to make money, then selling I can't sell. No, you can choose to be a buyer. You can also choose to be a seller. So it only goes with your strategy. So what are we buying? As I have said earlier on, you can choose to even be trading currencies. So let me give a good example about the currencies. So let's say maybe you're talking about the economic powerhouses like Euro USD. Euro and USD. You see, these are two economic powerhouses. This is Europe and this is United States dollar. You're trying to compare the economy of these two countries, and then you can choose to become a participant by either buying or selling. This one that comes on the first category is called base currency. The one that comes on the second category is called quoted currency. Are we clear? The one that comes in the first category is called base currency. The second one is called the quoted currency. And when I choose to come to the market to buy, market usually has the price quotes on the far right side. And the market usually has the line, the chart to which you see the market. So this base currency is for the chart. The quoted currency is for the price, the currency that comes next. In this case, we have the USD. So this base currency I've said is a euro. Anything that happens here trying to compare what is its value against the United States dollar. Example, one euro, it may have been 1.1235 United States dollar. Sometimes the same 1 euro can be 1.135 or 1 something something or 1.8 as it 1.7 as it keeps on going up. So you're just trying to find the value of 1 unit over euro. 1 unit over euro. So if I choose, example, to buy something here and then it went all the way till here and I choose to close it, the difference between where I bought and where I close the market is what I've made is my value. I've made money there. The same applies to when you are selling. Is that clear, wonderful patrons? So anyone can trade the global financial market. The key thing is for you to know when to trade. Now let me talk about the anatomy of the candlesticks. Anatomy of the candlesticks is also very, very important, wonderful patrons. What do I mean by anatomy of the candlesticks? Whenever you're trading, by the way, you usually have 3 types of charts. We have bar chart, we have candlestick chart, and we have a line chart. Bar chart looks like this. Something like this. I hope you've seen something like this in the market. This is called a bar chart. Candlestick chart is something like this. Line chart is basically a line. In this case, I want us to put our major focus on the candlesticks. Candlesticks gives you a bigger picture. It tells you a lot of detailed information about the market movement. So this is how you define or trade with the candlesticks. I hope you can see my screen. So this is a candlestick. Candlestick, I've said it has an anatomy. Something like this. Candlestick anatomy can tell you when the buying was happening, when the selling is going to happen, when perhaps with your strategy you might choose to close the market, you might choose to want to enter the market. So the anatomy of the candle is like this. You might find sometimes the candle might have a wick up and a wick down, and also a body. So this one you call it a body. This one you call it a wick down, and this you call it a wick up. Wick down and wick up. So we have a body, wick down and wick up. And this is a principle that is across both buying and selling of the candlesticks. You will see that the wick down, wick up, or the body. Now, how does a buy candle open and how does a buy candle close? A buy candle opens down. This is its opening, and closes up. This is its closing. A sell candle, in the other hand, opens up. It opens up and closes down. So for you to say that there is more buys in this market is when you realize that this market is still creating more up movement, which is the second candle that comes after the previous one opens at the exact point where the previous one closed, and then now closes above, like opening here and closing here, opening here and closing here. This then tells you this market has been buying up. The vice versa is the selling one. The selling one, the previous one had closed here, so the following one will open where the previous one closed. So it's gonna open here and it closes below. Open here, close below. So this means this thing has been doing what? It's been selling down. So when you come to the market, you come with an anticipation of making money in either the buying pressure or the selling pressure. I think I've given you a little bit hint on how the opening and the closing of the candlesticks works. So just a quick one for wonderful patrons. This is just the first start of the phase as you keep on broadening your knowledge base. I want you to learn more about the global financial market. On our next segment, we're now going to talk about how do I know when to buy? What are the types of things I have to consider whenever I want to take a trade? And also, what affects the market? And things that affect the markets are this. News can affect the market, and the news comes in different ways. There can be a natural calamity, that's a major news. There can be news that have already been arranged. There are things like, things like CPI, PMI, monetary policy, you see, PMI, this sort of news, unemployment claim, employment rate. Those ones are sort of news that have already been put into data. And then we have news that are speech news like Powell speak or speech. These ones are news that are highly unpredictable. Do not worry, wonderful patrons. I hope this first segment has been fruitful to you, and I hope that you've been able to learn a lot. You've been able to at least learn a first phase of the global financial market. See you on my next video as we now adjust the learning process. Thank you and adios.